Cleanweb TV. I'm Boon Tan, and with me today I've got Sam Gill, who is the CEO of ET Index. You are, in your previous life, you've worked in Google. You're also the author of Environmental Tracking 3.0, and you are running an environmental tracking company. Welcome to the show.
Thank you.
So Sam, I've met you at the Cleanweb meetups and a few other events, and it's been a pleasure to hear you speak, and you're really sort of articulate in what how you share your story. And I think what you're doing is actually really important. It's very a big sort of part of the financial how the financial sector is going to change the sort of how we manage climate risk. So my first question is what got you into this movement, and why did you start? And also I did notice that your Twitter handle is actually called the Carbon Kid. So could you tell us more about that?
Yeah, I guess just on the Twitter handle, I guess I was looking for a Twitter handle that was relatively short. And yeah, maybe I will change that to the Carbon Man as I'm 30 this year, I don't know. Although, interestingly enough, maybe it's psychologically something to do with the fact that this was a concept that originally my father was the main architect. So he wrote a book back in the 90s, which was called Environmental Tracking. Can Investment Revolution Prevent Ecological Catastrophe? That was the title of his book. And he worked in the city as an analyst and then briefly as a fund manager. And he absolutely hated it. He hated the culture, he didn't really like it, but he had this newfound understanding of how that world worked. And in particular, that indexes are a form of investment, an investment vehicle, a strategy, if you like, where lots and lots of money is moving in unison. Moving together, and that could really be a very powerful tool if it could be used to redirect capital away from, let's say, less sustainable companies towards more sustainable companies. So he wrote a book, set up a not-for-profit organisation, got together with a group of alumni at the London School of Economics, but to all intents and purposes, he didn't do what people do now, which is create startups and get a team, do a business plan, get funding. He was sort of like, here world, have this idea. And one of the other challenges was that there wasn't the data that there is available today, and people weren't thinking about climate change to the same extent that they are now. Anyway, fast forward about 10, 15 years, I was working with Google. I was going to go back there after university and do that was going to be one of my first jobs out of university, and they had a hiring freeze because of the financial crisis. So that option was off the table. I mean, to be honest, I'm actually quite happy about that. I think it's very difficult to say no if a big company offers you a job out of uni. So I decided that I wanted to speed up my ultimate plans, which was work for a big company and then start my own more entrepreneurial project. And around about the same time, I started reading more about climate change and realised that climate change is one of the biggest issues that we're probably ever going to face. And I know that sometimes people say that different generations always think that there's the issue, like, even in the 80s, people were sort of talking about nuclear war, for example. But climate change is a problem we haven't really faced before, and not to say that nuclear war couldn't also wipe us out, but climate change really is a big deal. So basically, I wanted to do something entrepreneurial, do something to tackle climate change, and also channel my dad's brilliance in this idea that he'd come up with by actually putting it into practice. Because there are very few ideas that one encounters that can really have a macro effect on a global problem. And whilst I'm not saying that this is a silver bullet, it potentially could be a very powerful enabling tool.
That's really interesting. I think the fact that you've kind of took on what the dad started was really inspiring. I think as a story, because I think it's the people that work in solving climate change have I know it's a sort of generational thing as well. Like the people who've been working in this space for a long time all all feel the urgency of getting action, and I think what you're doing is absolutely brilliant. And so I'm really curious, what was your sort of involvement with environmental investment organization? Because I know you were a director there, and it's a not-for-profit that deals with this area.
Yeah. So essentially, that was the organization that my dad set up, and when we started the project, we sort of, I guess, began putting the environmental tracking mechanism into practice. So the first thing we did was refocus it to look exclusively at greenhouse gas emissions. In the future we may expand out again, but we decided that was the priority, and we were doing all this as the environmental investment organisation. And so really for about 3.5 years we were operating with almost no budget and recruiting volunteers from all around the world to work together on ranking companies. So the EIO, as it's called, the EIO for short, still exists, but to all intents and purposes, ET Index is now carrying on its work. The main challenge was that when we were applying for grant funding, most of the grant funders didn't really get the idea. It's not as tangible as, say, planting trees in a park. And they also said it sort of sounds quite commercial, so go and get some VC funding. And then when we'd go to the VCs, they'd sort of say, oh, you've said the words not-for-profit, so it's not going to make any money, right? And so it wasn't until our lucky break, if you like, was being accepted onto the Climate Kick Accelerator program, and we had to create a new company to do that. And we'd been debating the for-profit, not-for-profit for so long, and I think it was just ultimately getting in the way of us having the impact we wanted to have. So the EIO owns a stake. The mission is enshrined in everything we do, but ET Index is now a for-profit company, and that's enabling us to raise external funding.
Okay. Let's talk about the sort of risk management side of what you're doing in terms of climate risk. So my background personally has been in risk management before I left in the insurance career to do sort of Cleanweb related work. And so the irony that I find is that risk management as a practice actually started has a lot of roots from the oil and gas industry, and right now what you are actually working on is actually a big part to do with risk management in terms of the investment markets. So what is climate risk that you see, and how does it pan out in the investment markets?
Sure. So I think there's a few different types of risk that we're talking about here. So the first and most important risk we're talking about is the risk of climate change leading to a catastrophic impact on human global civilization. And if you look back through time at different societies that have risen and fallen, there have certainly been rapid climatic shifts that have decimated peoples. The interesting thing now is that we have such a globally interconnected society, and we're about to unleash a feedback loop in terms of warming that goes very, very quickly. And the issue here is the inability for us to adapt to that change rapidly enough. So if we see a rise of 2 degrees above pre-industrial levels within 100 years, society just won't be able to cope. People will be, it's quite possible that up to a third of the planet will become uninhabitable. We talk about refugee crises now. All of those people will be coming to the places that are inhabitable. How will we cope with that? You talk about issues with food production. All of these things basically will amplify any existing tension we have in our society. So that is the main risk. Now, I would say that's really not a financial risk. That's a risk to
an existential risk.
To our civilization, our society. And I think it's just also worth pointing out that from a sort of human point of view, it's hard, in fact it's impossible to imagine that occurring without an awful lot of human suffering taking place. And typically it's the most disadvantaged, poorest people in any society that will suffer the most. So for me, there is a real strong moral element as to why we should do something about climate change. But equally, from a self-interested point of view, it's going to affect everybody. So that's the main risk we're talking about. There's also the physical risk. So if you live in a place like London, which is not very high above sea level, and where we have the Thames Barrier that you can just about see out of the window, stopping storm surges, and I believe that we have, don't know the exact number, maybe a couple of billion people living in coastal areas. A rise in sea level is also going to physically wipe out lots of parts of or areas of human population. So that's sort of an example of a physical risk. The idea of carbon risk in a financial sense is really that as we start to move away from high carbon to low carbon constituents within the economy, so if every car is a Tesla, or if every power generation is a renewable power, then if you're owning, if you possess high carbon assets, whether that's a coal powered fire station, or really whatever that might be, a very carbon intensive item, then if that suddenly becomes worthless because it doesn't make sense and fit into our new low carbon economy, then you'll be left holding the bag, and that could lose a lot of value. So there's a carbon risk to investors that whatever it is you own will lose significant value.
So I know that there's different ways of measuring carbon risk, and one of your, I guess I'm going to sort of jump in and sort of explain a bit of what you're trying to do, but I'm going to say is your index actually measures carbon risk that includes up to scope 3 measures. And could you talk about that?
Sure. So maybe to just explain what we do. That might help.
Yeah.
So what we do is we take the biggest companies in the world and we rank them according to their carbon emissions. So that's a public ranking that's designed to create an incentive for every company to be moving to the top. And then we link that to investable indexes or indices like the FTSE 100. So the same companies as you would find in a normal index, but where we shift the weighting. And what that's designed to do is that when they're tracked, when they're invested in by institutional investors, it's designed to shift capital, to reallocate capital from high carbon to low carbon. And the idea is if that happens at a sufficiently large scale, then that will drive companies changing their behaviour to lower their emissions and therefore reducing the risk of climate change catastrophe, but also for the investor reducing their exposure to carbon risk by shifting their money away from high carbon companies. In terms of the different types of emission and the types of risk we think about when we talk about carbon emissions, there is an accounting standard for greenhouse gas emissions, just like there is for accounting for balance sheets in financial statements, and it breaks it down into 3 scopes. So scope 1, your direct emissions; scope 2, your indirect electricity emissions that you bring in from a power station, unless you produce the electricity yourself. And then scope 3 is really everything in the supply chain, in the value chain. So if you think about an oil and gas company, its direct emissions would be perhaps the machinery that gets it out of the ground, but the real impact is when it's burnt in a plane or a car or whatever it is. So the oil company doesn't burn that fuel, but if it was producing something else like renewable energy, there wouldn't be that negative impact. So you really need to look at all of those scopes in order to get a full, meaningful understanding of a company's impact, its footprint, its carbon footprint.
And so with the index, what you're doing is you're aligning the incentives of the financial markets with the actions that can be taken by businesses in general and society in general to create that demand pool, I guess. Is that something that
that's
that's kind of my understanding of why what you're doing is so powerful?
Yeah, I mean that's one component of it. So let's imagine that a pension fund invests in an ET low carbon, so environmental tracking low carbon UK 100 index. What that effectively means is that investor is sort of not necessarily it's pushing those companies towards lowering their emissions essentially, and therefore the economy is aligned with the investor if it's lowering their emissions, and there's a virtuous cycle whereby everybody has a reason to start lowering their emissions. And the investor, for example, has a reason then to push for more stringent regulation, to be lobbying for harder carbon measures as opposed to lobbying by oil companies, the other way around. So it's really about realigning everybody's incentives. That is basically it, yes.
So I'm curious, what in terms of the ET index as an index measure, are there, how successful has it been with the business or the investment community? We are sort of right here in Canary Wharf, in the middle of all these big banks. Have there been any of these sort of engagement in terms of using what you're creating, and how is it sort of how's the response been?
Yeah, so we have a number of clients that are using our data, because we have lots of data when we create our carbon rankings every year. Within the next month or so, we will have 2 fund products. So one of our lead investors in our current investment round is a family office, and they're also going to be tracking the indexes. I think one of the challenges for any new initiative, and particularly when we're talking about large amounts of money, is that people aren't particularly willing to be the first mover. So you need that sort of anchor to then inspire confidence in the next people who are more likely to follow someone else. And so we're just at the point where we should have that first anchor, if you like, literally in the next month or so. And I think it's really going to be about scaling up from there. And from our point of view, it's all about building a brand. Indexes are all about brands. So that's why every year we publish a carbon ranking of the world's largest listed companies. And I think as we, talking about sort of maybe philosophical questions, as the world starts to move money away from high carbon to low carbon companies, I mean, we see it happening already with the divestment movement, for example. Lots of universities now have been campaigned and lobbied by their students saying, we don't want to support fossil fuel companies, and rightly so. So yeah, as the world starts to move away, would we want that to be done in a transparent, open way, and that's what we offer, that's where we have this public ranking, or do we want it to be black box and to not know where the money is going? And I think that over time, that's where our proposition will win out. But I think it is we're at the beginning of that wave, but it's a longer term.
So what's really powerful is obviously it's creating that sort of domino effect over a long period of time, and right now we're still very early in this sort of movement. But I guess the power in what you're creating is that it's not just looking at divestment as a sort of one-off thing, but you're looking at it as an engagement measure, and so you're creating that conversation to help organizations, or to direct organizations to move towards a more low carbon way of running themselves, I guess. Is that in terms of the engagement?
Yeah, so I mean really the core of this concept, environmental tracking, is that if we can begin to link the flow of capital to a company's carbon emissions, and what that really means is that if you're starting to share price, which is incredibly important for companies, is determined by supply and demand. Many things go into the valuation, but ultimately it's the supply and demand that will determine the price. Now, if you can link the demand to a company's greenhouse gas emissions, then all of a sudden you've created an incentive mechanism which cuts right to the heart of the way the financial markets operate and the way a business operates. And it's about creating the right incentives for businesses. So that is the core engagement mechanism of this tool. But what we also do is, as I say, every year we're ranking the companies and we're explaining to them that in order to move up the ranking, they need to disclose their greenhouse gas emissions, disclose them properly, completely, and have them independently verified. So that is our sort of the core nuts and bolts of the engagement, and the tool as a whole is designed to sort of focus on the really key driver for change.
And can you talk a bit about the sort of transparency within this space? Like how transparent are businesses in terms of disclosing their carbon impact? Is that changing?
I believe it is changing. So we see generally it's getting better because there's more pressure converging on companies all around the world, from civil society, campaign groups, regulators. So all of those things contribute to pushing people in the right direction. And in some places it's now mandatory, but not everywhere. So yeah, it's getting better. But I mean, it's incredibly. Last time we did our rankings, 50% of companies were providing complete data. So that's still half that are not. And that's precisely why we see a need for what we do, which is to publicly rank and to say, look, you need to be disclosing this data because, by the way, this is the biggest issue that we're dealing with as a society.
Is it 50% of the...
50% of the companies we rank, which last year was 1,300 and this year will be 2,500, were not disclosing data publicly. And that's why within our ranking system, the way we work is, in order to deal with this lack of data, is that if a company doesn't provide complete information, then it always gets the worst score within the same sector. So it has an incentive to be constantly improving and actually being honest and disclosing.
Cool. So yeah, what's your, we just had COP21 end of last year. What's your sort of view on that? Because I know there's been Mark Carney, the governor of Bank of England, they've just recently launched this task force for climate-related disclosure.
So it's a bit of a mouthful.
The task force for climate-related financial disclosure.
Yeah.
What's your view on that? Because I know kind of the big organizations are starting to do climate risk scenarios in their modeling of capital requirements.
I think there's. I'd say this is just part of a wider trend where there are, as I say, more converging pressures, and they're just crystallizing and becoming more and more real and more difficult to ignore. But I would argue that they are already here, and they have already been here for a few years now. And so what you see is a sort of almost like a cognitive dissonance within the investment community, where some people are really aware of this and doing something, and others are still somewhat buried in the sand, or at least their heads are. So we're at that. If you think about sort of the innovation curve, we're at that point where you have the early adopters are starting to move, and then we're going to move into the next phase. But ultimately, from a climate change point of view, we have about 15 years before we blow our entire carbon budget and definitely have 2 degrees of warming. And if we have 2 degrees of warming and we're locked into that, then I'm afraid the positive spiral, which could be as much as 14 degrees, according to James Hansen, the NASA scientist, within 100 years or so, I'm afraid it's probably game over. So, from that point of view, we need to be moving, a lot faster, and it's quite frustrating that not everybody gets it and wants to move quickly. But people do follow, and if we can get enough momentum in the next few years, then maybe there's still time.
That I guess that's very. I guess we should be optimistic, and I think what you're doing is giving me a lot of optimism. So I want to sort of dig down a bit in terms of your current crowdfunding campaign. How much are you raising? What are you going to do with the money?
Sure. So our target is 1.1 million. We've just gone over the 800,000 mark on Syndicate Room. And essentially the money is there to help us grow the brand. As I mentioned before, indexes are about brands, and so from our point of view, it's about establishing our presence, demonstrating our credibility, and ultimately building relationships with and winning over decision makers within the organizations that are managing the world's money. And to do that, you need a budget and you need to go and meet people. So that's really what that money can be used for.
Okay, so what what's your sort of let's so imagine if we are in the year 2021, looking back in the last 5 years, what would you say ET Index is? What would you say are your highlights of the company?
Interesting. Hard to say when we looking that forward, but I think so. I think where we're at now will be a landmark moment. The first major 1 million plus funding round will give us the resources to do what we need to do. So obviously that's going to be a key success. I think sometimes when you're running a startup, it's easy to focus on the long-term, maybe 10-year plan and not celebrate the little victories. So that will definitely be a victory. I think when we have our first major sort of marquee client that has a significant amount of assets following one of our indexes, because that really demonstrates to all of their peers that this is something that they can support, and it's just about building that up gradually. And unfortunately, that is sort of the only way to do it with this kind of business. Then, as I said, the next milestone is once we get to 1 billion of assets under management. And that might sound like a lot, but it's actually probably only 3 or 4 large clients for an index. Whether we'll have got there or not, I don't know. But ultimately, our objective is to get to 1% of stock market assets, so about $1 trillion by the time we get to 2020. Because at that scale, it would be hard to find a credible economist that wasn't agreeing that we weren't in some way influencing share price in line with emissions. And that's the holy grail for what we're trying to do at ET Index.
Awesome. Very well said. So, are there anything you want to sort of mention before we close?
I guess maybe just the last thing I'd say is that the original concept as it was conceived was broader than just climate change. And I am aware that there are other important issues out there, and I think if we can pioneer this approach for greenhouse gas emissions, and we're already starting to look at this to some extent, we would like to bring in other metrics. So for example, water is very important, biodiversity, issues on the social side. So really I see this as a mechanism that while we have the current financial system as it is, i.e. while there are financial markets and while there are pension funds investing in indexes, to use that model to be redirecting capital from essentially unsustainable companies to sustainable companies via a transparent market mechanism. And that's what ET Index is all about, or at least will be in the future. For the moment, we're focused on carbon.
That's I like what you just said. I was actually just at the LSE yesterday for an event with Paul Pullman, the CEO of Unilever, and he's one of the advocates for the Sustainability Development Goals that's set up by the UN and been led by the UN. And he did mention that all the sustainability development goals are related to climate change, and exactly what you're talking about, transparency being one of the key changes that we're going to see, which is going to drive a lot of things forward.
Yeah, I think people are becoming increasingly, intolerant when it comes to a lack of transparency, and obviously it can go too far. I don't know if you've read the book The Circle, demanding that everybody have a camera on them at all times, for example. Maybe that's too far. There should be some privacy, but certainly when we're talking about issues which are, for the public good, or where there is widespread consequences for somebody's actions, then I think people have a right to know. and it's ultimately through transparency that we have better stewardship. So yeah, I think it is the way the world's moving.
Well, I think that's kind of a really good, good conversation. Thank you very much, Sam, and I wish you all the best with your crowdfunding campaign and all your further sort of adventures with your.
Thanks very much. Okay,
thank
cool.
you.
Thank you. All right.
Thank you for listening to the Cleanweb Conversations podcast. Are you interested to learn more about the Cleanweb movement? Head over to cleanweb.tv. That's cleanweb.tv.